Vincenzo's Gold Crypto Investing, this March the 25th, 2025, noon time update here from just north of downtown Detroit, inside the Vincenzo mobile compound, under a very blustery and cold and some snow showers on this early spring day. Jay, the temperature is 36 degrees and snow showers currently inside the compound. And we ask you to bell notification and subscribe to the channel, which you have been doing. And we can see the acceleration to the upside: 64 subscribers in November, 63, 87, 93, and 120 in March and counting. And we would like to see that continue as you are helping build this to bring back information, education, truth, and trust back into the cryptocurrency sphere that has often been maligned as having scammers and shysters promoting nonsensical things. We're trying to bring that truth and trust back in. A brief update on Commodity Monday, taking a look at the gold bullion market. Gold bullion is still holding above $3,000 an ounce. It came off its high of about $3,050. Silver still holding over $33 after its most recent run up to the upside. B2 Gold's holding nicely at $3.16. Kinross is doing beautifully at $12.28. Barrick Gold, $19. First Majestic at $7 exactly. Fortuna flirting with $6. Pan American Silver at $26. Metallo Royalty, $3.06. And our little commodity, I call it my commodity, in Rivian, it's up 4.5% today. These are just the stocks that I own right there, these bottom ones. And that's why we follow them here, because I think they're going to do very good. I'm not a financial advisor, not telling you to buy them, but I believe they're going to continue to the upside, and I will continue to hold them, all of them. If we look at, get into this quick, at the Bitcoin price we were looking at earlier, we were talking about it. It's been on a nice little bounce since it almost got to our $74,000 target underneath. And about 2 Fridays ago, we were looking at that, saying if it tried to bounce after it had the bearish cross with the 50 under the 100 at 90,000 in the daily, we said we could try to rally. And it tried last weekend, but it failed and just stagnated out halfway up it. And then it reloaded, and now the last couple of days, you can see the reload. And then we had the first little pump last week with the Fed. Then we consolidated, and now we've had our second little pump over this prior weekend, and then continuing into today on Monday. And we were looking at it to see our most logical choice now of a rejection or initial rejection, even if you're ultimately going to break it, but I think it's going to have a rejection down, would be out between the 50-day moving average or that horizontal blue resistance line up there. And that seems to be where we're going to have to touch before it decides to do what it's going to do, which I think it's going to start consolidating to the downside. You can see that bearish cross that we had with the 50-day moving average in red there. Let me get this down. The 50-day moving average in red getting underneath the medium-term moving average in blue there at 90,000. You can see it dipped below it right there. And we were talking about it on all the videos ad nauseum, stemming back here when the moving averages look like this. We were telling you in the future these were going to start to trend down because we were in a reversal pattern, and that's what happened over the next 4 to 6 weeks. And then we were talking about last week, as it made that bearish cross, that there could be a relief rally now. Now that that happened, it would be a good technical time for a bounce, and over the last 14 days it has. But I think we're going to come up against some heavy resistance up here at the 2 overhead moving averages plus the horizontal resistance level. So we'll be paying attention for that and see how that plays out. The XLM price, it's had a nice bounce off of this 25.5 cents, an area that 2 weekends ago we were talking about it. And then the same as Bitcoin, it had an initial pump that weekend, came down, had another nice little pump with the Fed, and now it's having its third little pump here. And when we were talking about it 2 weeks ago, we were saying between the 200-day moving average and a descending overhead 50. And now the overhead 50 is at just under 31 cents. And the 100-day moving average is sitting there just above that at just below 32 cents. So that's still what we think we're looking at. And you can see that was us forecasting about a week ago where the moving averages would move to and where we would likely get a rejection point, which would have been on the falling 200-day moving average or 50-day moving average. So we're going to continue to watch out for that. The old XRP price, we got the same sort of thing happening here, except we haven't had the bearish cross yet. We had the nice, heavy, strong bounce off of the neckline at $2.09, something that we were watching to happen. We thought we would get all the way up as high as the 255, and what ended up happening was the Ripple case came to an end, and it had a nice 2-hour candle wick, and it did pump it just above it on a quick wick, but it got rejected right about the area that we thought we would get rejected, without knowing that the case would officially come to an end on the same day the Fed was announcing that they weren't going to raise interest rates. So now that's what we've been watching after we got rejected, where we thought we would. Now we're coming back up to try to maybe hit it again, and that's where we're going to look for a rejection, right? In the same sort of area. You can see this was the day of the Fed and the day of the Ripple case. In the moment the Ripple case became public by Brad Garlinghouse, you can see it right there, and then the big spike up, and then that exhausted itself, and we traded back to the downside like we thought we would, back down to almost the 100-day moving average. So on a return rally here, I would be paying attention to the volume very closely, and the 255 for the area of logical rejection again, and that's what I'm going to be paying attention to watch out for. AMP, the one we're waiting for to have its nice little big return rally, because if we look at AMP, we are down from the November high, and they like to do this in AMP, irregardless of what the market's doing. It's down still at current price, 71%. And it's been down as high as 75.68%. So it's oversold. It's been in this falling channel for quite some time, and it's eventually got to break out of it. And when it breaks out of it, it's going to be a bullish it's going to be a bullish reversal pattern, because these things trade to the downside, which are bearish formations, but eventually when they exhaust themselves, they break out to the upside for a brief rebound. And I still think that is in play and going to happen. Like, subscribe, become members of Jabroni Killers. Peace and love.